If you use Wealthsimple, you've probably had this thought at least once. I sold, so why isn't the money in my account yet? We live in a world where everything feels instant. We order, we pay, we transfer. So when we hit the sell button, it feels like everything should be done right then and there. But the world of investing is different. Just because you sold a stock doesn't mean the money immediately shows up in your bank account. The trade may execute, but settlement is usually 2 business days. Sell on Monday, it settles Wednesday. Sell on Friday, it settles Tuesday next week. And withdrawing the cash can take additional time. That's why planning matters. Investing may be emotional, but cash moves according to reality. If you put money you'll need urgently entirely into your investment account, the first loss won't show up in numbers. It will show up in your mind. And one more thing. For most people, the price they buy at is higher than the price they sell at. Why? Because we buy when we think it will go up, and we sell when we get anxious as it falls. So the most important question is this: at what price did I buy? More important than return percentage is your entry price. If you bought at $20, $18 is a loss, and $25 is breathing room. Without that reference point, if you just react to news, YouTube, or other people's opinions, your account will constantly shake. Investing is a memory game. Why did I buy? At what price? How long am I willing to wait? If you don't know these 3 things, emotion will decide for you. And finally, you will make mistakes. You've probably bought in too quickly and watched it drop, or sold out of fear, only to see it surge the next day. In that moment, you think, I messed up. But the real loss isn't the money. It's what you do next. Revenge buying, over-betting to recover, panic switching because others are moving. That's what ruins accounts. If you lose a little, that's tuition. Accept it. Move on. Investing is not a battle of pride. It's a battle of survival. The one who stays in the market wins more often than the one who tries to be perfect. We, as Wealthsimple users, can buy and sell with one tap. But before tapping that button, we have to think, when will I need this money? What price did I buy at? Can I endure this drop? Investing is not about speed. It's about endurance. And the people who make money are always the ones with a plan. And here's something crucial. what you buy matters. Let's say you bought a stock like GITS. At first, the story might look attractive. Growth potential, expansion plans, a sense that it could pop. But the issue is instability. Growth that isn't consistent. Quarterly performance that swings. Good news followed by shaky results. The market doesn't like instability. With stocks like this, if your conviction is weak, you won't hold. You'll waver. You'll doubt. You'll keep asking, should I sell now? What you need isn't excitement. It's strategy. If I bought GITS, personally, I might prioritize capital preservation over chasing a big gain, because it's not a fully stable growth company. These kinds of stocks can spike, but they can also drop sharply. So you need criteria. If it recovers near your entry price, maybe trim. If you recover your principal, reduce risks. If you gain profit, take it gratefully. Not every stock is meant to be held for 10 years. Some are better suited for capture the opportunity and exit, especially with volatile, inconsistent growth companies. Managing your principal matters more than chasing emotion. In investing, the most important metric is not return. It's survival. Your account must survive to catch the next opportunity. Recovering your principal is not failure. It's a reset. The ones who survive in the market aren't the ones protecting pride. They're the ones protecting capital. Many people wonder, can't I just make quick money with short-term trades? Buy today, sell tomorrow. Stack small gains quickly. But short-term trading is harder than it looks. It's not about speed. There are algorithms, institutions, capital moving in milliseconds. By the time you think, now, someone has already moved. And the biggest enemy of short-term trading isn't information. It's emotion. It ticks. Maybe it'll go higher. It dips. Should I cut now? Your mind becomes a roller coaster. Small profits, high stress, and frequent trades mean fees, spreads, taxes, invisible leaks in your account, especially when trading U.S. stocks with currency conversion costs involved. Short-term trades can become even more disadvantageous. Short-term trading is a mental game, more than a technical one. And for most people, their mindset breaks before the price does. So I see investing less like a sprint and more like a marathon. Your goal isn't one big win. It's still being here in 10 years. Protect principle. Wait for opportunity. Manage mistakes. And don't forget, stocks are a tool, not your foundation. Your foundation is your main job, your monthly income, your skills, your steady cash flow. That's your real asset. Your investment account is built on top of that. If the foundation is weak, even a good portfolio can collapse under pressure. Stocks cannot replace money. They are a tool to generate money. If you have steady income, temporary market drops don't destroy you. Without income, even a strong portfolio feels unstable. In capitalism, money buys time and options. Stocks are just one method of generating that money. They are not everything. You are bigger than your account. Investing is an accelerator, but your engine is your career. Strengthen the engine first. Build cash reserves. Then invest. That order matters. And ask yourself, why am I investing? Not for ego. Not for social media validation. But for options. Freedom. Security. Choice. And finally, know what you're buying. A stock is not a number. It's a company. What does it do? How does it make money? Is it profitable? Is growth consistent? How much debt does it carry? What is management saying? You may not visit the company in person, but you can read earnings reports, company websites, business models, recent news. If you can't explain the company to a friend in simple terms, you probably don't understand it yet. Investing is not about certainty. It's about understanding. Certainty shakes. Understanding holds. In the end, investing is the combination of stable income from your main work, risk management that protects principal, and effort to truly understand the businesses you buy. The market is not under your control, but your preparation is. Don't replace study with hype. Don't replace discipline with excitement. Good investing is decided before you press the button. Can I explain this company? Can I accept this price? Can I endure this volatility? If you can quietly say yes, that's real investing. Go slowly if you must. Money backed by understanding doesn't shake easily. And in the end, the ones who remain aren't the ones who knew the most. They're the ones who understood deeply enough to stay.